Hamilton home sales continue to bottom out as housing inventory climbs to record levels. Is this simply due to a slow summer market, or is it indicating something much more sinister? That's exactly what we discuss as we go over the August housing market for Hamilton and Burlington. Strap in. If you haven't heard, we just had our third interest rate cut in a row from the Bank of Canada, bringing the overnight rate to 4.25%, and so bringing variable mortgage rate holders down and giving a bit of reprieve with the prediction of up to 3 more rate cuts before the end of the year. Meanwhile, fixed rates are down under 5% as the bond market has been coming down over the past handful of months. So is the worst behind us? In terms of interest rates, it does appear so. But what impact is this having on the housing market on the ground level? That's what we discuss as we go over this month's market update for Hamilton and Burlington. My name is Morgan Little. I'm a realtor here in Hamilton and Burlington. If there's ever anything I could do to help in your journey, feel free to book a call using the Calendly link in the description below, or just shoot me a text and I'm happy to connect. Now, I'm starting this off with a big caveat as we are coming out of summer, which generally speaking is the slowest time in real estate because people are at the cottage, they're enjoying the last bit of summer that we have. It's such a short time in Canada that most people aren't thinking about buying and selling real estate. Also, there's often a lag time between something like an interest rate cut that we just had this week and the effect that it may eventually have on the actual market, because we haven't seen a real reflection in the market even after the first 2 interest rate cuts. Could it be time of year, or could it be that these interest rate cuts just haven't made enough of a dent for people to start taking action? According to the Realtors Association of Hamilton and Burlington, the Hamilton real estate market maintains recent trends as sales continue to slow and inventory levels rise. So you could probably just end the video here and get the gist of it, but if you'd like a deeper dive, stick around. Starting with the number of sales, which were 424 in August, down 15% from last year. You can really feel that one. 15% is a healthy chunk, especially if we look at how July's 491 home sales were only down 2% from the year before. Interesting to say the least. The number of new listings were 955, down only 1% from last year, but down from over 1,200 in July. This could very well be seasonable as people are soaking up the last bit of summer and not necessarily trying to list their house in August. I'm curious to see what happens through September here. Those 955 new listings added to the total inventory of 1,922, up 32.1% from last year. That's a juicy one there. And as the board mentioned in their statement we looked at earlier, a surge in inventory relative to sales has caused the months of supply to rise to 4.5 months, reflecting the highest level seen since August 2010. Those 4.5 months of supply still technically keep us in balanced market territory, but they are up over 55% from the same time just last year and up from 4 months of supply in July. So inventory is continuing to build. It's feeling like a buyer's market to me. Is this what you've been waiting for as a buyer, or are you holding out longer? Let me know your thoughts in the comments. Now let's look at the average price and see if that has any more incentive for you. With the average days on market at 35, up almost 45% from last year, and the average price at, drumroll please, $794,404. Down only 0.3% from last year, and actually up from July's $785,971. Now, this is the average price across all homes and areas. As always, different areas and different asset classes / types of homes are going to be impacted differently. What I can tell you is your entry-level, nicely renovated single-family home on Hamilton Mountain is still selling. Now, let's do a quick glimpse of what's happening in each market segment, with detached homes at an average of just over $877,000, down a point. Semi-detached averaged at almost $674,000, which remained relatively flat. Townhomes came in at $683,000, down almost 5% year over year, and the average price of a condo in Hamilton came in at $480,000, same as last year at this time. If I can ever do anything to help in your journey, feel free to book that call or shoot me a text. Happy to have a chat. Also, let's take a quick look at the different areas here. As I mentioned, Hamilton Mountain had 127 sales, which is far greater than any other area, with an average price of $700,000. I mentioned this again to further the point that the average price of almost $800,000 across the board is because it's taking into account places like Flamborough, Dundas, Ancaster, and Waterdown, where the average price is quite a bit higher. I just want to make that clear for those without a budget of $1 million plus. There are homes available in your price range. All right, take a ride with me across the bridge to Burlington, where they've been experiencing tighter conditions compared to neighboring regions, with 152 sales, down almost 19% from last year, and down from 162 sales sales last month. New listings were down over 5% at 303, again indicative of August, and those added up to the total inventory of 561, which, while being down from 588 in July, was way up nearly 50% from August 2023. A lot of this is due to new build condo apartments that have not been selling. The months of supply is way up as well, over 80% at 3.7 months before all of the available homes would sell if nothing else came onto the market. And the $1,172,556 average price in Burlington is up a solid 10% from this time last year, where we were seeing interest rates rising, unlike this year where we're seeing them fall. This is also up from just under 1.1 million last month. And there you have your numbers. I am curious to see what's going to happen through September and how this last interest rate cut, plus potentially more on the horizon, will have an impact on home sales and prices. Generally speaking, the majority of home sales happen in the first half of the year, but because we're in this declining interest rate environment, I'm curious to see if that will maybe switch and we'll see more activity in the fall and winter months. Time will tell, and I will tell you as it happens. Please share your comments below. I always enjoy the engagement, and as always, if there's ever anything I can do to help in your journey, even if it's just to pick my brain, feel free to book a call using the link below or shoot me a text, and I look forward to it. Till then, see you on the next one.